Welcome back to the channel, everybody. So in this video, I want to talk about the middle class shrinking and the wealth gap widening. So this is a very serious issue taking place in the world right now, and I don't think too many people understand what's really going on and why it's happening. So the wealth gap is accelerating, the widening of the wealth gap at a fast pace. And the truth is, this isn't a conspiracy, it's not fear-mongering or doom and gloom. It's just being realistic and looking at the reality for what it is. And the truth is, it's unfolding right in front of us as we speak. It's happening in slow motion, and it's been accelerating since 2020. And before we get into how you can protect yourself and what you need to do, you first fully need to understand the reality of what's happening and the current situation. So without understanding what's really going on and why it's happening, you can't take the right steps to actually protect yourself financially. So you have to understand fundamentally what's happening. And protection starts with awareness. So when you fully understand the situation clearly, then only and then you can actually take the right action to protect yourself and your family, financially speaking. So we'll start here. For context, back in 1971, this was officially when we went off the gold standard. I think it was the end of constitutional money. 61% of Americans at the time were considered middle class. Fast forward to today, that number has actually dropped to 51%. And the trend shows no signs of slowing down or reversing. The truth is simple. What's happening now is the country is splitting into two groups. Okay? On one side, you have the individuals that are doing extremely well. They own most of the wealth, most of the assets in the world. And on the other side of the spectrum, the other side, you have a growing population of people around the world and in America that are struggling just to make ends meet, living paycheck to paycheck, buried in debt, buried in loans, with very little chance of climbing out of that hole. And this is the truth. This is basically the definition of the widening wealth gap. Okay, you have the haves and the have-nots, and it's taking effect as we speak, and it has been for a while. And between the two gaps, what's happening is you have this middle class that's being wiped out completely. This is the widening of the wealth gap. Now, let's discuss why this is happening, because there are a few reasons. But the shrinking middle class and the widening of the wealth gap in the middle, where the middle class is being wiped away, this is being driven primarily by inflation and currency devaluation that's caused from central banks and governments pretty much expanding the money supply, printing currency, adding that to the system, and governments issuing more debt to fund their deficits. So in theory, the money, if it were to be distributed evenly in a perfect world, wages would be rising accordingly, there would be no poverty, everybody would get their fair share, everybody would be benefiting fairly and evenly. But that's not how the system works. And it's not the world we live in. And the reality is that the new money that's created, the bulk of it flows first into the hands of corporations, financial elites, financial institutions, and political donors. That's how it was structured, okay? It's structured like that, and the financial system isn't broken in the eyes of these financial elites and big players. As a matter of fact, the financial system, this debt-based system, is functioning perfectly for them, just the way it was intended to, by essentially pushing a lot of the wealth higher up the food chain to the rich and basically pricing out lower and middle income classes from owning assets, because the way to get ahead is to own assets. And if they price you out of that because they devalue the currency, then they're pushing you down the food chain. And the currency is currently being devalued. Inflation takes hold, prices of everyday necessities continue to rise, such as groceries, rent, gasoline, insurance, utilities, housing. Pretty much the cost of everything is rising. And at the same time, asset inflation is taking place. Because they're printing money, you have asset inflation, which means the inflating of assets such as gold, stocks, art, land, real estate, crypto, digital assets. And those assets climb up in price because we measure them in the fiat currency that they're printing. And here's the thing. The wealthy, the financial elites, benefit from this system because they own the bulk of the assets that happen to be rising in value when priced in fiat currency. Okay? As they create credit and debt, issue that into the system, increase the money supply. And this is another form of money printing, and they try to keep it complicated so the masses don't fully understand what's happening. But as currency units are created into an existence, pushed into the system, there is essentially more money, new money in the system, in the supply, chasing limited number of goods and assets. And essentially this pushes up asset prices when measured in that fiat currency that they keep printing and creating out of thin air. It doesn't matter if they call it liquidity, debt creation, credit creation, it's all money printing. And the middle income is the one that suffers, the lower income and the middle income class. And the lower income classes mostly don't own any of these assets. And essentially, they get stuck with the pain of higher costs without basically sharing the upside of asset inflation, which is what the wealthy and the rich do. They get that benefit. And the result is simple and unfortunate. The system is designed to keep the rich getting richer. And pretty much everyone else that does not own assets lower down the food chain continues to fall further behind. And this continues to increase the wealth gap. And this is the current situation. So for those already stretched thin, lower income, middle income class, the situation only gets worse as this continues. So to keep up with rising prices, millions of Americans and people around the world are pretty much relying on credit card loans, personal loans, credit cards, debt, And the US credit card debt has already hit $1.21 trillion in 2025, according to the Federal Reserve Bank of New York. And it's still climbing. So it's not getting any better, and the data says that. And people aren't just falling behind, okay? They're also digging themselves into a much deeper hole because of high interest rates tied to the debt that they have. So they'll never be able to repay the debt back, and they keep going deeper and deeper in the hole. So it's this vicious cycle. Inflation benefits asset holders because of asset inflation, but essentially it pushes wage earners down the hole even more. And the wealthy move higher up the ladder, higher up the food chain because they own assets, while the middle class is pretty much hollowed out, and a lot of the middle class is now becoming the lower income class. And those at the bottom pretty much stay trapped deeper in debt and keep digging themselves in a hole. And unless you position yourself correctly and strategically, the gap will only continue to grow wider and drag people down, middle income earners, okay? And it would get even harder, and that's the truth. So before we continue, I just want to mention something. If you want direct access to my personal portfolio, the mental models I'm using to navigate the market, how I'm positioning different strategic frameworks, including crypto, macro, and market analysis, high-level insights combining macro and crypto analysis and exclusive video briefings, then consider joining my financial market intelligence group. I put the details in the description, so it's easily accessible, and there are limited slots and they will be closing soon. Now, in addition to that, I just want to say, if you're looking for a secure, simple way to buy, sell, trade, or invest in cryptocurrencies and digital assets for the long term or for the short term, or even if you would like to roll over your 401k into various crypto assets with tax advantages through a self-directed IRA that has over 80 plus cryptocurrency assets with a flat 1% trading fee and 0 monthly fees, then it's worth looking into the crypto brokerage firm called I Trust Capital. And I did put the link in the description if you're interested. If you're not, that's okay, but at least make sure you have multiple exchanges and off-ramps so that you have backups. You don't want to just have one that you're relying on. Now, moving on. There's another very critical reason for why the middle class is shrinking at an accelerated rate. And the truth is this: it's because paychecks and wages aren't rising fast enough, and everybody knows it. They're not keeping up with the rate of currency debasement, which is 8 to 10% annually. Okay? The wealth gap widening as we speak isn't an accident, and that's the truth. It's a structural issue, and wages just simply aren't keeping up with the cost of everything and the cost of everyday living. As those continue to rise, wages aren't keeping up fast enough, and this includes food, insurance, healthcare, housing, taxes, rent, utilities. All costs of everything are rising fast. And unfortunately, the paychecks, the wages haven't kept up, and the truth is this: they are never going to keep up. This is one of the designs in the system to continue widening the wealth gap. Okay? And on top of that, for the past 20 years of globalization, this has pretty much stripped millions of middle income jobs away, and it's sent them overseas and outsourced them so it's more efficient and cheaper for the big companies. And now you have AI and robotics that are coming into the picture. And essentially, the truth is they're threatening to do what globalization did to office jobs, okay, and manufacturing. And this is only going to continue. It's going to do the same thing that globalization did to manufacturing jobs, factory jobs, and it's because of AI and automation. And basically, that's what's moving into the equation now, and it's happening very fast. Targeting white-collar roles that basically once seemed untouchable. And this trend isn't slowing down at all. It's actually speeding up extremely rapidly, and I think it would disrupt the entire world at least by 2028, 2030. So just be aware of that. Now let's talk about inflation and what we can really realistically expect, okay? Well, first of all, the Federal Reserve initially had an aspiration to get inflation under control. I think that's all nonsense, just talk for the masses. But the truth is, inflation will continue to accelerate regardless what they say. And it's only going to get worse, despite what they tell you. They are never going to have it under control, okay? And the Fed, their so-called 2% target, okay? This was the goal, their aspiration to get inflation to 2%, supposedly. The last time we saw 2% inflation was in February 2021. So the Fed was, if they were truly serious about hitting that number and lowering inflation, they'd be tightening, okay, aggressively. As a matter of fact, they would be raising rates, but instead, the exact opposite is happening. Okay, they're preparing to cut rates. And over 80% of banks globally are already in a rate cutting cycle. They're already cutting rates. And as usual, the Fed will follow. They're always late to act, and this is by design. And at the Jackson Hole, Powell confirmed exactly what I was warning about not too long ago. They're shifting their tone, and within 48 hours the next day, from not having rate cuts on the table, they pretty much did a 180 and said, there's a high chance we're going to cut rates. And that's the situation we're seeing now, very likely. And their language is what made it obvious. They've pretty much abandoned the 2% inflation target that they were trying to get to. And most people wouldn't accept that, and that's a fact. And here we are today. And the likelihood of rate cuts coming towards the end of the year, at least maybe September, October, are extremely high. And the truth is, this is all about refinancing the debt, has nothing to do with you. That's the truth. The lower the rates are, the more manageable it is to refinance the government's debt. And the government must refinance trillions in debt because it's coming due by the end of the year. And that requires a massive amount of liquidity injections into the system and lower rates to make that debt more manageable and to refinance it. They need more liquidity in the system. And the deficits will keep ballooning, keep growing, okay? And the Fed will pretty much enable it with rate cuts and eventually quantitative easing, whether they call it that or not. And this is going to be fuel for inflation in the next 12 to 18 months down the road. So the situation is not going to get any better. I'm not being cynical here. I'm just being realistic so that I can empower you with information for you to make informed decisions. Okay? And the system is already being flooded with liquidity as we speak. That's already happening. But it hasn't hit that extreme level, which will come after the rate cuts. Okay? Because in order to refinance the debt, they need a massive amount of liquidity in the system in order to refinance and roll over the debt so they could keep kicking the can down the road. And the truth is they're addicted to money printing, okay? Being off the gold standard gives them the flexibility they want to continuously enrich themselves by debasing the debt, debasing the currency. And if you're wondering why the stock market, Bitcoin, crypto, and all assets, including gold, are hitting all-time highs, while the real economy is looking fragile, the answer is because they are debasing the currency, increasing the money supply, and printing money. It's not because there's real productivity, not because there's real growth. It's liquidity, and liquidity is what drives financial markets, not fundamentals. That ended in 2009. And the Fed just told us what they're about to do. They are about to turn the fire hose back on, release trillions into the system because trillions are due in debt that they have to refinance. And the central banks will refinance and roll over the debt, which requires substantial liquidity. And that liquidity is essentially money circulating in the financial system, which will debase the currency, pushing asset prices higher. An enormous amount of liquidity will be injected into the financial system. And to achieve this, well, they're going to increase the money supply, okay? They're going to issue credit into the system, debt creation. And this will cause financial asset inflation and, of course, increase the cost of living inflation, which will hurt everyday people. And the last time substantial money printing and inflation occurred, what happened? The rich pretty much doubled their net worth and only got richer. And now, right now, this could be the setup for the next crisis as a pretext to roll over that debt. It's possible. We don't know. We'll have to see. But the point is they are going to cut rates and they're going to inject a lot of money into the system. And whether there will be another crisis as a cover-up or not, who knows? But the point is, regardless what destination they take, what path they take, the destination will be the same. The Fed's balance sheet will be blown out of the waters into new territory. And regardless what catalyst it is, which I think it will be a sovereign credit crisis, but the point is a lot of that money printing is going to make its way to the political donors and the big financial institutions before it gets in the hands of any of the people in the country in the lower income class. So the Fed's balance sheet is going to explode. This is the truth. This is coming. And they will try to contain it, the problem, whatever it is, but I think they will be forced to print without limit, and this will create a very inflationary environment. So, currency devaluation is inevitable. This is the direction we're going. Fiat will always lose its buying power. It will always lose value, and that's not going to stop anytime soon. They don't want people to understand that. The key to protecting yourself is owning assets that will benefit from currency debasement. Those portfolios that benefit from currency debasement will outperform everything else. And that is the type of portfolio that you want to customize for yourself. So the only solution, again, is to protect yourself now by being invested in the assets, in the financial markets, and getting yourself invested now, not waiting forever. Because the big crash, sure, it might come, but how far will we be by the time that happens? Something to consider. And in this type of environment, the data tells us that this broken system is not going to be fixed anytime soon. And the financial elites love it. The reality is, whether you want to believe it or not, the only option to get ahead is to invest in assets that are going to price in and benefit from that currency debasement. And those are the portfolios that will do the best in this currency debasement period that we're going through. That's all I got for you guys today, and I will see you very soon.